I'm Mr. Leach. I'm your professor for this Principles of Accounting course. I decided to put together these videos to help assist with areas that will be discussed during the chapters. A way to make the class a little bit more informative, so we can jump right into it. Chapter 1 defines accounting as the language of business. And accounting is kind of looked at from two different perspectives. It's either a financial accounting perspective or a managerial accounting perspective. The way it's broken down in the book, and really the way we look at it too as accountants, the financial accounting information is used for mostly external end users. That is investors, creditors, the public, consumers, stockholders. That's a big one, is the stockholders. Stockholders tend to look at the financial information that's put out each year, each quarter through the 10Ks or the 10Qs to use that information to determine if they want to invest in a company, they decide not to invest in a company. On the other end, managerial accounting is used more so for internal stakeholders such as management, executive management, employees, board of directors. This information is usually how did the company do compared to the budget? How did it do compared to the forecast? This information can be used to determine raises for employees, bonuses for employees, executive management's bonus. So managerials, in managerial accounting, you're more concerned about how did we do versus the budget. Financial accounting is more so how did we do year over year. So that's a quick breakdown of the two different ways to look at the accounting. The next thing he goes into is the different types of businesses. It's very high level on this in this chapter. We'll get into it further in further detail in a later chapter, but you have the sole proprietorship, which is one person, the partnership, which is two or more people, the limited liability corp, which is one or more people, the S corp, which is a small corporation, has less than 100 shareholders, and the C Corp, which is what most people know as publicly traded corporations such as Apple, Google, and things like that. They are classified as C Corps. Some of the benefits of these is the sole proprietorship is the easiest to start. You can literally get you a DBA and start doing business ASAP. The partnership, you just have to file a form with the state to basically, create your partnership. The limited liability corp provides limited liability in case there is some type of legal issue. The people who are suing you can come after the corp, but it cannot come after you. The corp is actually identified separate from the person. That's the same with the S corp and the C corp, and we'll get into those later in later chapters.